But it's been a rough month so far, and I want to bring in Ms. Schneider, Managing Director of MarketGauge Group, for her assessment of the mood of the markets right now. Mish, what have you made of this selling pressure we've seen recently in North American equities?
Well, part of it, of course, is seasonal. September classically is not a great month, so it certainly lived up to its reputation. Part of it was that a lot of the influences on the market that should have had a bigger effect seemingly in the summer really came whole, things like the strike and now the potential government shutdown, issues with China, the oil prices flying and fears of inflation, the Fed, of course, higher for longer. And so I think that all came in and people got kind of spooked. It's going to be interesting to see what happens from here, though, because so far there's been some damage in certain areas like small caps, obviously well underperforming. But the growth areas, it could look like more of a technical correction. So I think we're at a very interesting point right here to see if we can get some buying that sustains in NASDAQ and some of the big growth stocks and how that might trickle over to some of the more beat up areas.
So do you think there is a fair case to be made that we could see a challenging fall and that we could also see a bounce back as we move into the fall?
Well, the worst thing that anybody wants to hear is we could see this or we could see that. Yeah. But John, it's absolutely at this point kind of true that we are at such a precipice, is the word that keeps coming up for me, that we have to look for clues. And so my best clues usually come from the relationships that we have between, let's say, the long bonds and the S&P 500 or the junk bonds in the S&P 500. And interestingly to me, they have been very risk on up until this past week where they went more risk neutral. So as long as we continue to see those ratios doing well, so the TLTs can crash and so can SPYs, but the idea is that the SPY has to continue to outperform. Same thing with junk bonds. The junk bonds have to continue to outperform the long bonds. While that's there, I would weigh more to the side that something will give that will give hope back to the market. If those break down further from here and those relationships get more wonky, then I would say we're probably looking at another leg lower. And I know that sounds somewhat wishy-washy, but I think if you're a smart investor and more active, that's kind of where you have to be right at this very moment in time.
Let's assume that there's still some money that's sloshing around in the equity market. Maybe some comes out. This idea of value versus growth, people will come on and say, well, it's been a big year for the growth names, and now you got all these headwinds out there. It's time to take some profits from that group and maybe reassess, look for some safer plays or look for some better opportunities, some of these value names. What do you think the storyline looks like for those kinds of directional moves? Because I guess the other part of that argument is people will come on this show and say, well, on a second, if the economy is slowing, the growth names are the only ones that can actually grow your portfolio over the long term.
Well, it's interesting because if you are looking, the reason why they're called value, right, is because people think that the market will flock to the things that people need as opposed to, things over paper kind of philosophy. But we have seen those types of rallies very short-lived where the money goes back into growth. And I do believe that the growth stocks, I actually was kind of hoping to get a little bit cheaper here, but I think the growth stocks are still going to be where people are going to flock to because we're heading into that society. It's not going to be in a year, it's not going to be in 3 years, and obviously things got overdone. But you have to look at Microsoft, NVIDIA, Apple, Amazon having its own issues, but Google, Meta, even Tesla as the kingpins of really basically not only where money's being attracted to, but in terms of having such strong companies to be able to go forward in the trends we're seeing, like AI, for example. So, yeah, I'm not so keen on the value right here. I was a little encouraged by durable goods this morning. Perhaps things aren't as bad in the U.S. economy as one would think. But I would also say that one statistic, and especially if it's more lagging, is not necessarily a reason to jump into value right here, or even basic materials. I'm sorry, John.
Got it. And then final question on oil. I've said several times already today that the S&P is on track for its worst month this year. But in September, energy stocks in New York are higher. They've been higher in Toronto as well as a group, and the bulls were waiting for this kind of moment. What's your outlook for oil, and I guess as part of that, investing in energy-related names?
Well, clearly, as outperformers, they have been a great opportunity, and the corrections have been extremely shallow in oil, giving people opportunities to get in on even, a minor dip. At this point, everybody was looking at the $90 a barrel on the WTI. I actually thought once it got through 80, that was the more interesting play. And at $100 a barrel, obviously that's what people are looking for, maybe 103, 107. That would be about a measured move from this major breakout. The bigger impact right now is what does it really mean? You have to look at the underlying implication. Why is oil rising? Okay, we know obviously it's being manipulated by OPEC. There's still issues with Russia. We've been caught here in the U.S. with low supply. But really, it's going to be how long that seasonality lasts. And as we're heading into a different season here in the fall and then the winter, without major disruption, we may not see that much more upside in the oil. So the question is, can the market get used to a level of $90 a barrel and not really necessarily be a negative impact to the consumer? And the jury is still out on that right now.